Hi everybody, welcome back to the Peregrine Capital Hedge Fund Academy. My name's Alan Yates, I'm the Head of Distribution at Peregrine Capital, and today we're going to be talking about hedge funds in investment products and how you can access them. So I think the important thing to say here is that, first up, hedge fund availability on list platforms has gotten significantly better over the last couple of years. So the nice thing for you guys as financial advisors is that you are able to access these products now on whichever your preferred list platform might be, and across the various products. So they are available in discretionary, they are available in endowments, in living annuities, and pre-retirement products. So if we dive into the individual products from here on out, the first I think that we can talk about is the discretionary products. So the nice thing about discretionary products, obviously there's no Regulation 28 applicable to these things. And the important thing there is that means that there's no limitation to how much hedge you can use in a client's portfolio. I think one of the limitations to be aware of, and obviously I think why many of you might be doing these modules, is that there is the phase category requirement. So you need the license category 1.26 in order to invest in these funds for your clients. No allocation limit, as I said, so technically you could be 100% hedge if you wanted to. If we go then on to endowments, on the list, these are obviously on the LISP's life license. 1.26 is applicable in some instances. I think it very much actually just depends on how the LISP views it, whether they do a see-through. If not, then obviously you just need the license category that is applicable to the life product. Again, no allocation limits here. So from an endowment perspective, you can put as much hedge exposure into the portfolio as you or your client would like. If I then move on to the pre and post-retirement space. So in pre-retirement products, given that these are Reg 28 compliant vehicles, there is a limitation. So the first thing is to say to you that hedge as a category has its own category limitation of 10%, and then there's a subcategory limitation here. So it gets a little bit more complicated. The first is to say that any individual hedge fund can have a maximum of 2.5% exposure in the retirement product. So if, let's say, as an example, if you were looking to use our funds, we've got the 2, so you could put 2.5 in pure hedge, 2.5 in high growth. In order to get to your 10% at maximum allocation, you'd obviously want to have additional fund managers in the mix. If you are looking at a fund of funds structure, that then takes that individual limitation is 5%. So 2.5 for single manager, 5% for fund of funds. Again, 1.26 is applicable here. So you do need the license category. Then if I go on to living annuities, and I think this is actually a space where we've seen huge interest from financial advisors and their clients, mainly I think because of the qualities that hedge funds bring to the table in terms of being able to smooth out that return profile, being able to protect on the downside, etc. It's certainly been a very popular addition to the living annuity space. Nice thing once again is that because Reg 28 is not applicable, you are able to allocate as much of the portfolio as you want to hedge funds and to a single manager or multiple managers, whatever it is that you're after. Once again, because this is a life product, it will depend on the company, the life company issuing the product as to whether or not you need 1.26. Then if I move on to other avenues that these things could be available to you, I think two things that are worth noting here is there are a number of additional structures out there that provide access. First up would be some of your stockbroking and client portfolio accounts where they have a personal share portfolio. There are a number of providers that can actually incorporate these vehicles into their share portfolio reporting. So for clients that are perhaps traditional stockbroking clients, or they have a portfolio of equities that they would like to supplement with some hedge exposure, this is possible. But again, it does very much depend on who the stockbroking company is that you're utilizing in order to be able to access that. If you'd like more information about this specifically, please reach out. We can let you know who has access to these and who doesn't. Then just maybe a quick comment on the pure hedge fund specifically, because as I mentioned earlier, this is something we've seen that's been pretty popular in living annuity. So Our pure hedge fund is a market neutral fund. What does that mean? It means that the fund is not looking to take directional exposure to equity markets. So really what we're looking to do here is we're looking to generate the most consistent return profile possible with very, very low correlations to overall equity markets. So if you think about the way that often investors construct particularly a living annuity, so post-retirement, they're sort of saying to you, I've done the hard yards. I've obviously accumulated my wealth over my working career, and now there's an element that says I really would like some protection in my portfolio to make sure that it's got to be growing at inflation plus, whether that's inflation plus 3 or 4 or 5, whatever the number might be. But I want that ride to be smooth, and I want that sequence risk reduced as much as possible. Something like a market neutral fund is actually a very powerful tool in this space. And the reason for that is twofold. Number one is to say it gives you that consistency, it gives you that downside protection. But for clients that are tax sensitive, obviously the alternative options are normally fixed income products, which give you a decent yield, but that yield is often exposed to income tax. The nice thing about a fund like this is that because the returns we are generating are mainly capital in nature, so because we're not taking big exposure to fixed income assets, the fixed income element of the portfolio, and while there is one, is quite a lot smaller than in some of these comparable products. So that means there are some tax advantages as well for the end client if they're using this in either in the discretionary space. So those are just a couple of ways that you are able to access our funds. I think the fantastic thing here and the summary for you is to say they are available on all the major platforms now across the various product sets, so you're not really limited in terms of how you are able to access this. But a lot of them do require the licensing element. So I think it's super important if you're watching this video and you don't yet have the 1.26 license, it's really worthwhile getting it. We've obviously set up this training academy as a means to provide the upskilling necessary when you're under supervision. And if your compliance officer is concerned about that, let them reach out to us. We're happy to help. We want to make sure that a big part of what we do is education and bringing more guys into the mix who are able to access these funds, able to access the benefits of these funds for their investors is super important to us. And I think it's a big benefit to the industry and one that we'll keep to push. Thanks very much for your time.